everybody. Welcome back to the Always Bookkeeping YouTube channel. My name is Alana, and today I'm sitting down with one of the owners of Always Bookkeeping, Tony, to talk about why most Canadian businesses fail and how they can avoid it. Hi, Tony.
Hi, Alana. How are you?
I'm great. How are you?
Good. It's an interesting, exciting topic that we're talking about today. So,
Yeah, absolutely. I'm very excited. I know that like 50% of small businesses in Canada fail within 5 years.
That's actually a stat within Canada. So
It's so crazy, and it's really avoidable, I think.
it is super avoidable if people understand, or business owner understand the warning signs and how to avoid them.
Perfect. Let's just jump right into the topic.
Yeah, we can do that.
Statistics show that nearly half of all small businesses in Canada don't make it past 5 years. To break down why that happens and how business owners can avoid it, Tony, who has worked with hundreds of entrepreneurs and seen firsthand what makes businesses succeed and what causes them to fail. So, number one question is, why do Canadian businesses fail, Tony?
The interesting thing is people think business fail because they don't have enough customer, but in reality, business fail because they have poor cash flow management. That's number one. Number two is super important too, is that they business owner tend to price their services and products. Number three is a lack of financial planning. That could be they don't have help from their accountant or bookkeeper, so the bookkeeping isn't up to date or updated regularly, so that they can have the statements to look at every month to make business decisions. The last one is growing too quickly. That's really interesting because people tend to think that grow is good, but growing too fast and growing too big could be a bad thing for your business.
Okay.
And for a real life example is that we used to work with a roofing company that have a revenue of $500,000 or more in a year, but they still struggle financially or have really bad cash flow just because they don't look at the numbers every month. They are profitable every month, but then they have cash expense that they don't see on their P&L statements regularly. So that could be the number one thing that we saw in that specific company is that they have employees, too many employees that they run payroll every 2 weeks, and they don't look at the actual cost of having employees, which is the payroll expense that they have to remit to CRA every month. So they pay employee, they get the income tax deducted from the employee's pay stub, and then they have CPP deducted, they have EI deducted. So those deductions, the business owner hold in trust for the employee, and every month they have to remit it to the CRA. This particular business owner did not remit it every month.
Oh, no.
And then they get a collection notice from the CRA saying that, hey, this is the amount that you missed within the last several months. So here's your bill for $60,000, let's say.
Wow.
And they have to fork up that $60,000 when in reality they should have noticed it every month and remit it every month so that months later they don't have a big tax bill from the CRA. And that could really mess up their cash flow because now they don't plan for that big tax bill and they cannot avoid paying that amount.
Right. And I know that the CRA isn't very forgiving when it comes to the tax remittances that you owe.
They are not, just because that amount is not technically the business owner's money to keep. Those are the deductions that they have to remit on the employee's behalf. So have to pay that payroll remittance every month.
Right.
Yeah.
Wow, that's huge. And you mentioned cash flow. So can you talk me through like a real world example of how cash flow affects business owners?
Yeah. So for cash flow simply means that the revenue coming into the business versus what coming out every month. So your obligations like paying for the employee, paying for material that you need to get the job done. So for example, we're going to use a contractor that do renovations. So they complete a job that is $50,000 for a kitchen. And they have to fork up $20,000 in material that they have to buy to get the job done. They have to pay $10,000 in employee wages, subcontractor wages, and then they have to pay for insurance, fuel, equipment costs, and other overhead like equipment rental and all that. So now imagine a customer take 60 to 90 days to pay for the job. And the customer doesn't pay anything upfront, so you have to fork up, $30,000, $35,000 just to get the job done before ever getting paid for it. That could really mess up with your cash flow, just because you don't have $35,000 laying around just to get the job done.
Right.
So the one way for us to help with the business owner is that, hey, is it possible to get the customer to pay 40%, 50% upfront to, pay for the staffing, to pay for the material costs. And then let's say you finish the countertop, you finish the painting, the cabinet, then you get another 35% or 40% pay from the client to get that next step of the project done. And then the inspection is another 10% that the client have to pay. And the final walkthrough, you get 10%, the last 10% paid by the client. So that could really help with your cash flow, just because now you don't have to fork up your own money to fund the project. You get the client to pay for the material and the staffing costs up front and get the project underway.
Excellent. That makes a lot of sense. I know a lot of business owners are like, I'm invoicing lots. Why do I have a cash flow problem?
That's right. You may get the benefit of the profit from the project, but you don't have the 35,000, 50,000, or whatever amount that you need to get the job started and finish upfront. And that could really mess with the cash flow, just because you have to pay for your employee, subcontractor, whether or not you get paid from the customer first.
Yeah, those are great strategies to prevent business owners to have to wait until the job is done to get some money.
That's right.
Some cash flow.
Yeah.
What about pricing mistakes? I know that you mentioned pricing mistakes at the top of the video. How does that cause business owners to kind of get off the rails?
So a lot of business owners think that a way to grow the business or make the business better is that undercutting your competition. But we see that very often with new entrepreneurs that just get into the market. You have to value your time and effort into getting the job done, not who is the cheapest on the market. A good way of thinking that is a consumer can get a Honda for $20,000 to get the job done, but there are customers out there that would be willing to pay 2x, 3x, 4x amount of the price for a Honda with the BMW or a Mercedes-Benz or Porsche that could get the job done the same, but would get you from point A to point B. But it is the name that they provide and the quality of the service that you are offering. So for example, let's say we have a client that do a cleaning business and they charge $120 for house to be clean, and they forget to factor in the fact that they have to travel there, they have to pay for the cleaning supplies, they have to pay for the taxes for the profit they have to get from the work, they have to get insurance, they have to get the marketing done, and they have to pay for the actual work that they provide for, let's say 2 hours, 3 hours that they need to get the job done to clean the house. And after all those expenses, they may only take home $10 to $15 for a 2 hours job. That is way below minimum wage. So you have to factor in everything that you need to get the job done and what is the market for the gross profit. So let's say the cleaning business, you need 30 to 45% gross profit. So you need to actually mark down all the expenses that require to get the job done. And are you in the market standard for that industry? So
right.
Underpricing is a big problem. So you have to do your research. We can help you with that to find out what is the minimum amount that you need to have for your revenue.
Right.
Mm-hmm.
Yeah, I think that's something that business owners often overlook is the additional expenses, not just the gas on how to get to each job, but like the insurance and all of the extras. So that's good to know. And when you get a client based on the lowest price, they're usually not a client that's going to stay with you forever.
That's right. They're just looking for the cheapest option possible. And if you do value and believe in your service, you want to provide the best service possible to bring in, the referral from the client that you just did. Hey, business A is doing a great job of cleaning my house. It is not the cheapest, but it's the best, quality out there. So we would strongly recommend going the route where you provide a good service instead of providing the cheapest service.
Right.
Yeah.
And that leads me to my next question about the lack of financial knowledge. Do you think that plays a significant factor in some of the mistakes that business owners make in their endeavors?
Yeah. So many entrepreneurs or business owners are really good at the trade or the skills. So for example, that cleaning business or subcontractor that do renovation on a house, they are really good at doing that job particularly, but they may not be really good at reading financial statements, really good at, finding out the actual cost, what is the gross revenue, what is the net profit. So having that help from your bookkeeper or accountant to actually find out what your the level of revenue and gross profit that you need to have for your particular industry is really important. So with the real life example, we used a restaurant. So that's a really good example just because the food costs and everything that you need to run a restaurant fluctuate daily or weekly. So let's say you run a restaurant and the food costs goes up by 30% this week. That wipe out your entire profit for that week just because the food changes. So you have to really know your food cost percentage, labor costs, inventory costs, and profit margin. So you have to really know those numbers on a monthly basis, or at least, bi-weekly basis when you look at your numbers, whether how much it costs you to buy those grocery to make those item on your menu. So having help from your bookkeeper or accountant is really beneficial for your business.
Talking about bookkeeping, Tony, since you just mentioned it, why is that such an important factor for businesses?
So having a bookkeeper or a bookkeeping business behind your main operating business is basically having a GPS for your baby, which is your business. So if you don't have one, it's you basically driving your business vehicle blindly. So for example, we have a business owner that come on board and never visit their, review their financial statements every month for the last year or two. So he thought the business was doing well, but because the bank account looked busy. But when we finally looked deeper into the numbers, we found that the expenses had increased significantly. So his gross profit went down. Several invoices were never paid. So his AR is always outstanding. So he never collected the invoices that he sent out to the client. And then there were a large tax bill that was building up. Like I mentioned, the payroll. So he thought that everything was up to date by paying the employees monthly, having the payroll done up to date, but he never remitted any remittances to the CRA. So there was a big bill from the CRA that was building, and then he now owed thousands of dollars that he wasn't expecting. But by having a bookkeeper, we look at it every month. We know that, hey, the payroll is completed, but you didn't pay for the remittances the month prior. So having that plan is really beneficial so that you don't have a big tax bill that messes up with the cash flow. That brings us back to the first point where not having a bookkeeper could really do a number on your business just because now you have a big bill that you have to pay for and that messes with your cash flow for the entire year.
Wow. So that bookkeeping aspect really ties everything together.
That's right. That ties us into the fact that, the business doesn't have a customer problem. It's the cash flow and not knowing your numbers problem, just because now you don't have the additional money that you didn't plan for to pay for these big bills that just suddenly come up.
All right. You also mentioned at the top of the video that growing too fast is a problem, which is surprising because I thought businesses were trying to grow and growth is a good thing. So why is growing too fast a problem?
Growth is good for your business, but uncontrolled growth can actually hurt the business. So let's say a small landscaping business was just doing, let's say, $500,000 annually. And then suddenly this year in 2026, they land a big city contract or a big commercial contract for a residential real estate. So they have to do the landscaping for about $1 million or $2 million. So they are not equipped for this big of a contract where they don't have the equipment, they don't have enough employee to finish this job that it just signed. They have to hire more employees, whether that be additional 5 employees, 10 employees to get a job done. They have to buy more equipment. That would be like another 1 or 2 more trucks to get the job done.
Yeah.
They have to buy excavator or rent excavator or whatever the equipment that they need for this job, and that require a bigger yard. So are they going to rent a new yard to store all this equipment? Are they going to buy a piece of real estate to store all these equipment that they just bought? So that require money upfront to get all this bought for the equipment and the employee. And once the contract ends, are they going to have another contract with the same level of revenue? Would be, is it going to be another $1 million contract for in 2 years or in a year? Will they be able to afford to keep these employees that they just hired? Are they going to be able to afford these new equipment that they just bought? Are they going to be able to keep these loan payment for these equipment? That could really put a strain on the business, just because now they don't have the money coming in to fund these new things that they just bought for the business. So that could potentially bankrupt the business, just because now they don't have the money to pay for all this stuff that they just bought. So they can, for these new contract that they signed that's really big, they have to consult with the accountant that can have a financial plan for them. Is it a renewable contract with the city? Is it just a one-time thing? If it's just a one-time thing, is it worth it for you guys to sign it, or just keep continuing what you're doing by having smaller contracts that doesn't strain your cash flow and your business on the long run?
Excellent. So that's something that you can help the customer make the decision so that they don't grow so big that they're too difficult to pay their expenses.
That's right. So it's a big decision for the business owner to make, whether it's beneficial to sign this big contract or not.
Great.
Yeah.
Growth is good. Uncontrolled growth can
not
be problematic.
Good. Exactly.
Nice. Thanks so much for explaining that.
Of course.
So what is it that business owners that are successful, what do they do differently than entrepreneurs that are struggling?
So successful business owner, the number one thing that we noticed is that they know their numbers from top to bottom. So they know how much money they make, how much invoices are outstanding, who doesn't pay them every month. They know the gross profit margin. They know the net profit margin. They know if they are outstanding on loans, or are they outstanding on tax payments. So they review the financial reports every month, whether that would be their current bookkeeper or current accountants. They have a financial plan for the business. They have a business plan for the business. So they know the business inside and out. They don't necessarily have to know, how to characterize specific transactions that the bookkeeper do, but they know, okay, I spent this much on subcontractor this month. I spent this much on fuel. I spent this much on supplies and material for this job, but they don't necessarily have to go in and actually do the work. They review with their bookkeeper and, discuss what is the next plan for the business, or for the next month or the next year. So that's the main thing that we notice on the business owner that are really successful with their business.
So really just being a little bit more knowledgeable, hiring that bookkeeper and going to the meetings every month.
Exactly. Showing up to the meeting every month is really good for your business. All we ask is just to show up to the meetings and, actually understand what is going on in the business, instead of we delegating it and just shove it on the side just because you don't like looking at the numbers, just because you don't like to deal with the CRA. We strongly recommend that you know your numbers.
Excellent. Mm-hmm. So what piece of advice would you give entrepreneurs who are starting out or who may be struggling in their business?
So for new business owner or business owner that want to make a plan for themselves or the business in the new year, or today, or next week or next month, we recommend doing it from day one, is that you have to track your numbers. You have to know your revenue level. You have to know who pays you, who doesn't pay you, how much your expenses are. And secondly, for the new business owner, you have to separate between personal and business finances. So you can't just mix between personal and business, just because we now don't know if the numbers are correctly for your business. Are they actually expenses for your business? Now that you mix between the two, your expenses may be over stated just because now you have the personal expenses in there too.
Right.
And lastly, don't try to do everything alone. We recommend you getting professional help, whether that would be a professional bookkeeper or an accountant, so that they can have professional insight into how your business is doing. So having those three key things for business owner is super important to have a well-oiled machine that runs smoothly, profitable to go into, the next 10 years for your business, not just, file your tax return every year and hope that you're in business. We want to make sure that you're in business for the long run.
Excellent. So if anyone's watching the video today that is running a business and is struggling, if you're thinking about starting a business and want to do it the right way, get in touch with Always Bookkeeping. And how can they do that, Tony?
They can visit our website at www.alwaysbookkeeping.ca. Give us a call at 780-554-8356. Or just email us at info@alwaysbookkeeping.ca. The first initial consult is free. So just book a consult with us. One of our associate, myself, or my business partner, Denise, will be more than happy to discuss what you need for your business or how we can provide the beneficial service for your business to grow. We hope you liked the video. So see you guys on the next one.
All right. Bye, everybody.
See you.